So thank you for joining us. I want to introduce Joe McLean with Bangor Savings Bank, who's going to be talking about SBA loans and demystifying SBA loans, giving you some information on exactly what an SBA loan is and the different types of loans that are available and what might be a good fit for your business. And with that, I do also want to say thank you to Bangor Savings Bank, who is sponsoring this workshop for us. It's through the support of organizations like Bangor Savings Bank that let SCORE do what we do and keep all of our services like this one free. So thank you very much. And with that, I'm going to pass it over to Joe.
Awesome. Thank you very much, Dan. And Dan, I will say how I have this set up through how I had to get on to show my video. I can no longer see everybody's um, face or hands raised. So please let me know if somebody does raise a hand at some point and has a question.
Not a
But
problem.
no, yeah, it's a pleasure to meet everybody. My name is Joe McLean. I am a senior relationship manager, business banking with Bangor Savings Bank. Been with the bank now a little, almost close to 2 years. And I'll share a little bit more about myself here in just a second. But what we are covering today is demystifying SBA loans, essentially an SBA loans 101. And it's not letting me. For some reason here, it's not letting me go to the next slide. Bear with me just a second. It's not a good start.
No, it's
Let's
not.
try this again. All right, can you guys see the screen?
Not yet. It didn't show up yet.
My apologies.
There we go.
There we go. Okay. All right, so session outline. First, we'll go through some introductions, which it does sound like some of you guys have already chatted in. Kind of what you're looking at, either what your business is, startup or a seasoned business, and what you guys might be looking at. Two, why might a small business seek an SBA loan? We'll then cover more about the SBA. How does it work? What types of loans are available? And then there'll be a section for resources and references that you guys can access after the meeting. So a little bit about myself. I've been 15 plus years in the banking industry, 10 plus years in business lending. Essentially what I do here at the Bangor Savings Bank is assist business owners with financing in every phase of business ownership by providing guidance on both lending options and helping to structure your financing. So next we would just go through and do some introductions. Does anybody want to hop off mute and share what their business idea might be, what stage you're in, and then kind of share maybe what your current comfort level is with the SBA? And it's okay if not. If you chatted in, that's also fine.
Hey, my name's Will Martin. Me and my wife own a bagel shop in Orono, Maine. We've been operational for almost 5 years now. We're kind of at a point where we're looking to expand. So that's definitely, we're looking into small business loans to kind of be able to take that next step up and kind of see where we can go as a business.
Okay. Awesome. Thank you for sharing.
Joe, my name is Frank Yoner. I am a SCORE mentor. I'm here because I picked up a client that's in the process of starting a mobile home or a modular home manufacturing operation, which will require financing.
Okay. Thank you. Anybody else?
I'll throw my hat in the ring as well. My name is Dan Reed. I also own a marketing company, so I'm interested in seeing what options are available for expansion.
Awesome. Thank you, Dan.
Hi, Joe. My name's Rob Ellis. I'm actually looking at using a small business loan for a rental property and seeing if that's possible.
Okay.
Purchase.
Anybody else? All right. Thank you so much for sharing. And again, feel free to chat in, your business or what stage you're in as well. We'll try to make sure that we cover, as much as we can during this 1 hour session. And again, if anything needs to be taken offline afterwards, happy to do so. All right. So moving on, why might a small business seek an SBA loan? So here we have some of the listed reasons why an SBA loan might be a good fit. Could be for working capital, inventory, an equipment purchase, construction of a property, commercial real estate, expansion or acquisition. And then there are definitely some other reasons out there as well. And again, I will say this again. So if anybody has any questions as we go through this, feel free to chime in and or raise your hand, and Dan will assist me and let me know that you guys have a question. All right, so more about the SBA. The SBA establishes loan guidelines to reduce lender risk for small businesses. So when you're looking at an SBA loan, a lot of banks may turn to utilization of the SBA to get more comfortable with a deal. Essentially, what the SBA is going to be doing is they're going to be backing the loan. So it's an SBA-backed loan to simplify the loan process for small businesses, and it actually simplifies the process for the bank as well. The SBA partners with lenders to enhance access to funding for small businesses. And essentially here at the bottom, you see the trio. So we have the SBA, the lender, and the small business all working together to try to achieve the goal of obtaining financing for the business.
We did have one last introduction in the chat, so I'll go ahead and
read it
out. We have Tori, who has an existing guide service in Northern Maine, and they're seeking to either expand their current business or look into what options might look like for a new venture. And they feel comfortable with the SBA programming and opportunities as they are, but really wants to dive in and weigh all the options before making a decision.
Okay. Sounds good. Thank you for sharing, Tori. All right, benefits of borrowing through the SBA. So again, like I just said on the last slide, so the SBA guarantees or backs the loan. The SBA will reduce risk and allow easier access to funding. Competitive terms. Counseling and education are available on some certain loans. You can have the option potentially for some lower down payments. There's flexible overhead requirements. And in some cases, on some certain loans, no collateral needed. All right, eligibility for borrowing via SBA. So you must exist as a for-profit business. You must be located and conduct business within the United States. Must be creditworthy. Other loan or financing options unavailable. So that piece there, that's a common question that would pop up is, if you're able to go conventional straight through the bank without, a need for the SBA to step in and assist with, the bank either getting comfortable, or this may also pop up if you have significant amount of liquidity, and the SBA, and we'll dive into this a little bit further, but the SBA may not be an option, or like the 504 program may not be an option. You'll see that as we progress through with the slides. And then the last one, lender will provide the full list of requirements for the specific loan. Any questions so far?
Not seeing any yet.
Okay. All right, eligibility for borrowing the SBA continued. So lenders and loan programs have unique requirements. Generally, eligibility is based on what a business does to receive income, the character of its ownership, and where the business operates. It must meet SBA size standards, maintain ability to repay the loan, pursue a sound business purpose. So I don't think any of these items are big surprises to anyone. And again, I'll ask if there's any questions about what you've seen on the last two slides.
I have one about the second point here.
On this page here?
Yeah, when it talks about what a business does to receive income, what exactly are they looking for there?
So, good question. So it could be a variety of things. So what we're looking at when we're looking at eligibility for what they've received for income is where is the income coming from? So there could be situations where certain income may not be eligible. Certain industries that at this current juncture we wouldn't be able to work with. But what the bank is, how is your business generating income? So somebody mentioned, rental income. Can that be utilized? So yes, it can. And then however else you're receiving funds, or what are you selling for goods, guide services. So all those things would be eligible, but there's going to be certain income that may not be eligible income if it's coming from industries that are prohibited. Does that help answer the question?
That makes sense.
Okay.
So like industries the SBA can't work with.
Yes. Yeah.
And we had one last introduction in the chat and a question.
Yep.
So we had Ashley. Her husband and her are starting up a dairy with a plan to process milk and sell milk and other dairy products in a farm store with the goal of expanding, into other markets as well.
Okay.
And we have a
Thank
question
you.
from Tori. Is research-backed business plan enough to provide or to prove ability to repay a loan for startup?
So sorry, say that again.
The question
Research.
is a research-backed business plan enough to prove ability to repay a loan for a startup?
All right, so great question. So that is going to be part of the component, and I'll speak to kind of what our requirement, like most banks' requirements, would be. So you are going to need a business plan that is well laid out, and there are SCORE mentors who can help with that process as well. The question, is it enough? Typically, so what the banks are going to look at is they're going to look at years, usually 2 to 3 years worth of personal returns, a personal financial statement. So we'll get to know the character of its ownership through like a credit report polling. So there's multiple components that go into getting the startup loan. It's going to be, what cash is available, what's the character of the ownership or the borrower / guarantor, and then collateral is an important piece as well. But generally, like why we work with the SBA is in some cases we might have a collateral shortfall. So we'd want to see your business plan with the projections, the financial documents that I referenced, and then all of that kind of factors into the bank's decision. And the credit, generally a credit report is going to be pulled, and that is also going to play a factor.
I could be wrong, but it feels like the heart of this question is kind of asking about being pre-revenue.
Okay. So you're talking pre-revenue to obtain the loan?
Well, just if you are pre-revenue, is it still possible to get an SBA loan.
Yes. Yep. So in some like so if yeah, if we're looking at a startup loan, we understand that there's going to be, we're going to have to, the bank's going to have to essentially believe in what the business plan is portraying. So we understand that, yes. So in this situation, like you may be starting up a business, but you're not going to see any revenue from this business for 6 to 12 months. Um, that's where the bank, in general will leverage an SBA loan to help get comfortable and or back this idea, this loan. There are other factors that I just mentioned that would play a factor in obtaining an approval as well. But yes, that's, in a lot of cases, we are utilizing the SBA to help with obtaining startup capital. Does that help answer the question?
Yeah.
Okay. Any other questions before I move on to the next slide? And again, we may cover some of these things as we go along, so feel free to also jot down your questions, and at the end, you guys can pepper me as well. So the SBA partners with lenders. The SBA does not, in general, make direct loans to small businesses. So in a lot of cases, what you'll see is if you apply directly through the SBA website, they're going to partner you with a local banking institution. So you can either go directly, you can go through that route, or you could also look to one of your local banking institutions to help with doing an SBA loan as well. And it does note there are exceptions around declared disasters as it relates to that. This partnering increases ease, access to available loans. The lender partner coordinates application and approval of the loan and its management thereafter. Finding a lending partner. Prior to connecting with a lender, be sure to have the following important information on hand. And here's some of the items that I just talked about just a couple minutes ago. So business plan, the amount and use of funding sought, credit history, financial projections, collateral, and industry experience. I'd say this is one of the more important slides, and there's going to be another slide that follows, but this slide here is going to outline, if you're coming to the bank, as a baseline, this is what the bank's going to want to see if you're looking at applying for an SBA loan or for a loan in general. This will be a good one to reference after the fact. The SBA's lender match tool can help businesses find a local lending partner. So if you do not have a relationship with anybody or having trouble, finding which bank you should use, you can use the SBA's lender match tool on their website. What should you ask the lender about? Interest rates, minimum credit score, cash flow requirements, prepayment penalties, grace periods, if and when full repayment of the loan amount can be demanded. What lenders participate in the SBA program as partners? More than 800 lenders within all 50 states. So here in the state of Maine, you're going to have, most banking institutions participate in SBA financing. So depending on where you are, you could use the SBA lender match tool to see who might be local. But in general, like for instance, like with Bangor Savings Bank, we're going to be able to lend to anybody here in the state of Maine.
Yes.
Any questions about these last two slides?
Do you have two questions in the chat?
Okay.
So Robert, the slides and the video for today's chat will be sent out afterwards in an email, probably either today, tomorrow, or Saturday. So you will get the slides afterwards. And Tori was asking a follow-up to her previous question. And I'm guessing she'd asked size standards. I'm guessing that she's asking about the minimums and maximums for the different types of SBA loans.
Yeah, so we're going to cover that here in just a few minutes to talk about, what the minimum maximums are for what they can fund.
Perfect.
It's going to be on one of these slides. And again, if it doesn't get answered, we'll circle back to it as well. All right, All right, so then once you have all relevant information gathered, the next steps in the process are to describe your needs, get matched with a list of interested potential lenders, engage with those potential lenders. So if you are looking to shop and see, what lender is able to provide you with the best, rates and terms, that would be important. And then you would apply for the loan. And here are the types of SBA loans. So first one, you have a 7A loan. The next would be the 504 loans. Third, micro loans. And then the fourth, some lenders may have conventional non-SBA approved loans available as an option. And we're going to dive into each of these here in greater detail. All right, so the 7A loan is SBA's chief business loan. It's the most utilized loan that the SBA provides. Provides loan guarantees to lenders, and these 7A loans are capped at $5 million. So in terms of the maximum, this might help with Tori. The maximum that you would be able to do as a 7A loan would be capped at $5 million. Supplies funding for small businesses with specific requirements. To be eligible for a 7A, you must be an operating business, you must operate for profit, be located in the United States, be small under SBA size requirements, not be a type of ineligible business, not be able to obtain the desired credit on reasonable terms from non-federal, non-state, and non-local government sources, be creditworthy and demonstrate a reasonable ability to repay the loan. So I think that kind of speaks to the last question we had too of, the pre-revenue is, when we're looking at, are you eligible, your credit background for yourself personally as a guarantor is going to factor heavily in demonstrating through your business plan and projections the ability to repay the loan. That's definitely an important piece of the startup piece of it. Now for 7A loan uses, be used for acquiring, refinancing, or improving real estate and buildings, short and long-term working capital, refinancing current business debt, purchasing and installation of machinery and equipment, including AI-related expenses, purchasing furniture, fixtures, and supplies, changes of ownership, complete or partial, multiple purpose loans, including any of the above. 7A loan repayment. Loan repayment terms will vary according to several factors. Most 7A term loans are repaid with monthly payments of principal and interest from the cash flow of the business. Payments stay the same for the fixed rate loans because the interest rate is constant. For variable rate loans, the lender may require a different payment amount when the interest rate changes. So none of these slides are really going to go into, and this is where when you're seeking out your financing and you're talking to different lenders, some lenders may have options available to you that may be more favorable to others, depending on how comfortable they can get with the deal and just how they can maybe factor in like an interest-only period to start out. So each lender is going to be a little bit different, and it's important to talk to your lender about what options are available. In some cases, if you're doing, and I'll provide an example of some things that I've done recently, is maybe I've and I'm not going to use super specific, but let's say it's a restaurant or something in the service industry where you're coming into a leased space and you need to have a build out done of this space. Your lender may be able to put on an interest only period during your build out phase. So why that's important is right now you're not making any revenue. So if you need 6 months of build out for, a restaurant or a barbershop, multiple different things that you could be doing, maybe the bagel shop that you're expanding into, you may need like a 6 month interest only period where you're doing that build out and you're not having any revenue come in. So at least that way you're not having to make full principal and interest payments. So like there will be some options like that that are available to you in some of these loan programs. But after the fact, payments will, depending on what you choose, payments will stay the same for fixed rate loans, or if you are in a variable rate loan, your rate will adjust depending upon what your rate and term is, which will likely be tied to prime plus a percentage. I feel like that piece is kind of important to know, especially if you're in the startup or expansion. Any questions on that?
I just have one really quick. So is that like that lender might have that deal to tack on to the SBA loan, or would that be a separate loan with different terms than the SBA loan?
No, it would be all part of the same
Okay.
loan. So so it'd all be, you wouldn't have to do two separate loan applications or anything like that. It would be part of what the bank is committing to you in their commitment letter.
So these aren't necessarily hard and fast rules, but more guidelines around what to expect.
Yeah.
So we had a question in the chat. Could you briefly explain variable versus fixed rate for loans?
Yep. So fixed rate generally, a lot of banks right now, you might be looking at a fixed rate of like a 3 or 5, 7, 10 years. And depending on your loan amount too, may determine, how far out a bank is willing to go on the amortization of the loan. But in general, so a fixed rate loan, you're gonna sign on for a 5-year loan with a 5-year amortization for 7%. Your payment, in theory, on that loan, it's going to be paid in the same monthly installments over those 5 years. So it'll be 60 months, the same payment at that same interest rate. A variable rate loan, you may do a 5-year variable loan that's at prime. We'll just use a prime plus 2%. In that scenario, your rate is going to adjust if the federal prime interest rate adjusts. So if it goes up, your rate's going to go up. If it goes down, your rate's going to go down. So that's how that variable rate piece is going to work. And it could be prime plus 0. So maybe you're just banking on, hey, I think the interest rates are going to fall. I'm going to take advantage of this variable rate. And, if the prime interest rate goes down, a half a point, you're going to reap the benefit of paying less interest over the course of that loan. But on the flip side, if you're in a variable rate loan and the rates go up over that 5-year period, because you did a 5-year loan, now you're going to see yourself paying more interest.
Can you explain what the federal prime rate is?
Yeah, so the prime rate is essentially the rate that is set by the federal government that the banks abide by. So it's the federal prime interest rate. Fed meets generally, it's almost like every other month. I believe it's 8 times a year. Don't quote me on that one. But they'll meet and then they'll decide whether they're going to raise interest rates, keep that prime interest rate the same, or they'll see a rate reduction. So if you are in a variable, if you're shopping right now, it's important to pay attention to that because it is going to affect the rate that you pay. The fixed interest rates don't always, each bank is different, but these rates do play a factor generally on what the bank's interest rates are as well, but not always.
And
that's on the fixed rate.
The interest rate is kind of tied to inflation to some degree, right?
Yes.
We had another question here from Mary. Can you make a large principal payment prior to the end of the 3 or 5-year life of the loan?
Yeah, so that is, I think there might have just been some changes on that as well. But that I would pay attention to whatever the bank's prepayment terms are. I'll revisit this at the end because I think there was just some changes as it relates to the prepayment penalties that the SBA had in place. Used to be, you can make a 20% payment at any time without a penalty. but I'll revisit that with you guys at the end. Definitely important to pay attention to, depending on, if you have a larger loan and you do have a prepayment penalty, it could be pretty significant. Any other questions on 7A?
I think that was our last one.
Okay. All right, the 504 loan program. So this program provides long-term and fixed rate financing for major fixed assets that promote business growth and job creation. Available through certified development companies, also known as CDCs, SBA's community-backed nonprofit partners who promote economic development within their communities. CDCs are certified and regulated by the SBA. It's capped at $5.5 million. The 504 loan eligibility requirements: they must operate as a for-profit company in the United States or its possessions, have a tangible net worth of less than 20 million, have an average net income of less than 6.5 million after federal income taxes for the 2 years preceding your application, fall within SBA size guidelines, have a feasible business plan, maintain good character and ability to repay the loan. And then the 504 loan uses is it's used for existing buildings or land, new facilities, long-term machinery and equipment with a useful remaining life of a minimum of 10 years, including project-related AI-supported equipment or machinery for manufacturing products, consolidating debt under the conditions listed in 13 CFR, so basically listed in that page number, and repaying or refinancing debt defined as qualified debt under that same page and paragraph. The improvement of modernization of land, streets, utilities, parking lots, and landscaping, existing facilities, working capital. Oh, sorry. So that's all the uses. 504 loan cannot be used for working capital or inventory, consolidating, repaying, or refinancing debt that does not meet the definition of qualified debt, speculation or investment in rental real estate, the financing of AI-related working capital, intellectual property, or consulting services soft costs. The 504 loan available solely through certified development companies, uniquely qualified in 504 program regulations, certified and regulated by the SBA, helps small business assess lender options and craft project financing. There is a tool available to help locate a CDC near the business. Then the last piece of the 504 loan is the repayment. Payments will be made via wire, check, ACH. There are longer maturity terms available, so 10, 20, or 25-year maturities. The interest rate it's through the CDC tends to be less than what the bank is offering. I will say that. Pegged to an increment above the current market rate for 10-year U.S. Treasury issues. Totals approximately 3% of the debt may be financed with the loan. So that's talking about. So some of the slides here don't necessarily. So that there's going to be a little bit higher of a fee potentially on these 504 loans, is what that's alluding to. This is, I think, maybe providing an example might be useful for somebody here. But the 504 loan is the loan product that we turn to when maybe somebody's looking for a lesser down payment. So the bank in this situation is going to finance 50% of the loan. The CDC will do 40% loan, and then you're only maybe only having to put 10, and in some cases, depending on the property, like 15% into as an owner's injection. We utilize this. I mean, I utilize this loan a lot for going back to the uses, existing buildings or land, or new facilities. And in some cases, we see it with the long-term machinery or equipment. This is a product where if you have too much liquidity or if you have too much cash, this product may not be an option for us. So we'd have to look at that on a case by case and see if we can get it to fit the mold. But the 504 loan product is heavily utilized. It is a great product. It's also great that you can extend out potentially 25 years on your amortization, whereas a lot of conventional real estate financing is going to be capped at 20 years. So it can certainly be a good loan for someone who's looking for that. Any questions on the 504?
Yeah, there are a few.
Okay.
One that I just have off the top of my head is what are going to be the big differences between these two loan types? Just as in layman's perspective, it seems to be the length of the loan and maybe the size of the loan.
Yep, I would say, yeah, the length of the loan, and I mean the other big piece is, what do you have available to inject for owner's equity? So if you're looking at $1 million, commercial real estate acquisition for the business, and you only have, 100,000 to put into it to feel comfortable, like this might be a good product. Whereas if you're doing this conventionally, you're going to be at that minimum generally of the 20% that you need to inject. So I'd say that's what we come across the most is, what are we able to inject from the business's cash to still, maintain operation and feel comfortable, or it could be a new venture as well. But those are definitely some of the factors. And then obviously the maturity, because when you're doing a 25-year amortization versus a 10-year, that loan payment's going to be significantly different, no matter what the dollar amount is of the loan that you're doing.
Another question I had was, and I could have just misunderstood, is it that 7A can be used for real estate and like rental real estate and 504 can't, or is it for both of them, or how does that work?
Yeah, so on the 504, so so in speculate, it cannot be used for rental real estate. The 7A, so I would say again, we'd have to look at what you're looking at, but the 7A, I may actually have to double check myself on that one with the rental real estate, and whether or not that would be utilized on the 7A as well. I do believe it can be.
And the other question we had in the chat is it typical to have more than one of these loans at the same time?
We could, depending on, I would say that's a great question. So we definitely could. We just try to see what fits the mold. In some cases, like on a 504, just an example, like you might be thinking, like, can I include renovations or equipment in this loan? We try to, if we can, we'll try to fit that all into the 504. That's usually the most common question that I think pops up is like, do we need to do a separate loan, or can we look at just wrapping this all into the 504? And in some cases, we can wrap it all into the 504. And it's usually it's typically best for both the bank and the borrower at that point if we can just wrap it all into one. It's a lot easier on the process. But yes, you could in theory have two separate loans at some point. Sorry, I just kind of bounced around the slides on here while I was answering those questions. But does anyone else have any other questions on the 504?
It looks like the last question that we have so far.
Okay. All right. So the last loan would be the microloan. So it provides loans up to 50,000 to help businesses start up and or expand. It's available through SBA designated intermediary lenders. These lenders make all credit decisions and set all the terms for businesses' microloan. On average, some form of collateral as well as personal guarantee of business ownership is required. Individual requirements will vary from loan to loan. Microloans uses working capital, inventory, supplies, furniture, fixtures, machinery, and equipment. And then the microloan repayment, its amount, planned use, lender requirements, needs of the small business owner, maximum repayment term allowed for an SBA microloan is 7 years. Interest rates vary depending on the intermediary lender, generally between 8 to 13%. So in general, some of these loans that are on the smaller side of things are going to have a little bit of a higher interest rate. You might be looking at like a prime, depending on the situation. You might be looking at, prime, if you're variable, prime +3, prime +4%. Going back to the 504 loan, some of the CDC has their own set interest rates. The bank's going to have their set interest rates. And what I was saying there is sometimes the CDC offers a little bit more of a competitive interest rate, but there's a little bit more fees involved with doing the 504 product versus like a conventional or 7A. So these next three slides are kind of wrap up the presentation. But I would say I wish I could see everybody, see if anyone and it has any other questions. But so for references and resources, you can go to the sba.gov /funding programs /loans. And then for question, and again, you're going to get these slides. So for Q&A, just thank you for attending. Please complete an evaluation survey. Schedule an appointment with a SCORE mentor who can be super helpful, especially like at any stage of the business. But if you're looking at starting up or the expansion, these SCORE mentors can provide a lot of good, useful resources and advice. And there's a website for additional workshops.
Yeah, it looks like we have one question.
Okay.
Someone with their hand up, Ashley.
Yeah, and so I apologize for my complete ignorance probably with this question. But if we went into say my local credit union seeking a loan, would they know about these products, or do I have to go in and say I'm seeking a 504 and then and then the CDC? Like, I don't know how that all comes together. Like, how does this process even operate?
Great question.
How do we get it done?
That is a great question. So I will tell you, in my experience, I have had it happen both ways, where I have somebody come into and tell me what they need and what they want. You don't need to do that. I would say if you're going to go into your local credit union or bank and you go in and say, hey, look, so you have you guys started, because you're the one that's looking at either starting up or have already started up the dairy. Is it a dairy farm and dairy products? Correct.
So we're very, very starting up. So no, we're not milking yet. So
okay. So in like how I would like this to go is like you would come in and you would talk with, maybe somebody at the branch. So like here at Bangor Savings, like I cover a couple different branches, and if you came in and asked that question, we'd set up a meeting. I almost think it's best. You don't have to know like, hey, I need this 504 loan for this. That lender should be able to take your situation and then help guide you and provide you with the available options. With SBA being one of those options for sure, and probably the most frequently utilized option as it relates to starting up a business. So I wouldn't say that you need to know that you need to go in there saying, hey, I need a 504, or hey, I need a micro loan or a 7A. They're going to be able to point you in the right path, and then, essentially provide you with the option of like, hey, we can look at option 1, option 2, and go from there. For your dairy, like, are you guys going to be purchasing a farm?
So yes and no. We purchased a farm already from family members, but it has not been an operational dairy for a very, very long time. So starting from scratch as far as that goes.
Okay. Yeah. So you will, I can go back to the slide in a bit, but you will want to have, when you go into the bank, I would say it's super helpful if you have at least the business plan and the projections in place when you go to the bank. There's in a lot, and again, it's okay if you don't, because if you go into the bank, they're probably going to tell you like, hey, love the idea. We want to see business plan. We want to see the projections. We want to see all the financials. So that is going to be obviously play an important factor on obtaining the financing. But I would say you definitely shouldn't have to go in there and tell them what product you need. They should be able to help guide you and find the right solution.
Okay. And then sorry, just to follow up, like if it seems like this 504 is the right one, then automatically the CDC gets involved. Like that is just a part of that loan package. Is that right? Or
yeah, so a lot of cases like I would provide some options and resources as to who the CDCs are out there, and then we'd probably talk through that if I was doing that with you.
Okay.
We'd say, hey, okay, here are some of the local CDCs. And then we would, you could even have, and I actually encourage, when we're doing a 504 loan, I encourage having a meeting with both the bank and the relationship manager that's covering for that CDC and talk through the whole loan and the big picture of everything. Because it's a big decision. Like if you're looking at a 504 loan in general, I mean, usually they're larger loan sizes. You want to make sure that you know everything about the loan, and in this situation, like the situation I provided where like we wrapped in equipment into it as well, and or renovations. Like in some cases, your CDC, they might just be like an order taker and say, hey, yes, the bank, we want to provide financing for this. But I think it's helpful to have a conversation with both parties, and you can say, hey, have you thought about, are you going to be purchasing new equipment? Are you going to be doing any renovations? Maybe there's an option to roll those into there instead of you spending your own cash to do those things. So I'd say a joint meeting between the three of you would be a good idea.
Okay. Thank you.
I also wanted to mention that we do have, I believe, 6 or 7 mentors in Maine and SCORE that specialize in agriculture. So if you don't have a mentor, I would highly recommend reaching out. We have an ag team specifically for that.
Good to know. Thank you.
We did have a few other questions in the chat here. One was from Mary. Joe, do you service the Bangor area?
So I do not actually. I service Portland West, out beyond Wyndham. So for Bangor, I think we actually just had another volunteer from Bangor Savings that did a presentation just a couple weeks ago. I'd recommend Sam Houston there in the Bangor market if you're looking at Bangor Savings Bank. But I know that he just did a presentation a couple weeks ago alongside Dan, and I think that would be a good resource for you. I, of course, am happy to answer questions, but if you are looking for a local lender, I would recommend Sam.
Yeah, I'll shoot you his email in the chat, Mary. And we had another question in the chat as well from Frank. Could you provide approximate processing time for the loans for 504 and 7A loans in your experience?
Yep, that's the 7A. The 7As, they vary. 7As can get done a little bit more quickly. I know it's a wide range, but I would say in general, most banks should be able to get the 7As done 3 to 6 weeks. Your 504 loan is going to take a little bit longer. You're probably looking closer to like the 3 to 4 month time frame. And a lot of that factors, the big factor there is, when we're doing the 504, there generally is real estate involved, and that time frame of getting the appraisal completed and all the vendor work done and everything completed through the SBA can take some time. And you're also dealing with two separate, you got the CDC that's also working in conjunction with the bank. It could be done sooner. I don't want to say that it can't be, but that's just, I would say, rough time frame. I would anticipate 3 to 4 months on those, and that's from start to finish, from the time you apply to the time that you get the loan wrapped up.
We had another question in the chat here. Folks, if you do have any other questions, please feel free to put them in the chat or use the raise your hand function. We have a few more minutes for Q&A. The one question we have in the chat right now is who hires the appraiser?
Yes, the bank will take care of that for you. Yeah, so the bank, we'd usually get like 2 or 3 bids. We'd come back to the borrower and say, okay, here's what you're looking at for a cost of the appraisal, and then we would give them the okay to proceed. So not something that you have to do ahead of time.
All right, do we have any other questions today? We'll give it a second if any folks do have any questions. In the meantime, I just wanted to say thank you so much, Joe, for presenting to us today. I feel like we covered a lot of information and was very informative. And several people in the chat have said thank you, so we really appreciate your time doing this today.
Yeah, I feel like I had one question to come back to. I think it was on the prepayment penalty. I would just say I would check on the prepayment penalty verbiage through the SBA's website. I do believe there were some changes that were beneficial to the borrowers as it relates to the prepayment penalties. And then there are some other changes that I think are coming March 1st that are also out there on their website in relation to eligibility as it relates to U.S. citizenship. So that's another one that I've come across in the last couple weeks. That is also important to pay attention to as well. Yeah, I'm happy to be a resource. Even if you're not doing the loan through Bangor Savings Bank, I'm happy to provide any sort of advice or just lend an ear and kind of hear what you guys are going through if you do reach out. And then also I was trying to get on this slide here, but there we go. This here as well. You can scan this and find a local SCORE mentor that can kind of help you as you are developing your next plans for your business.
Thank you so much, Joe, for presenting to us today. And I want to say thank you to everyone coming and all the great questions we received. I will send out the slide deck and a recording for today's presentation, as well as Joe's email. So if you do have any other questions, you'll know where to find it. I hope you have a great day, everyone.
Thank you, everybody.
Bye.